Like a lot of people think cash flow and revenue are synonymous. That's not what I refer to when I refer to cash flow. I refer to cash flow as profit, right? Like what's real profit? What's the leftover after you've spent what you've spent? What's left over to, it could be reinvest in your business, but it could also be money that's coming home to you, because where you have more cash flow, right? You have more profit. That's where there's more options. And when you have more options, then you have more freedom.
The following is brought to you by Thryv, the end-to-end client experience platform that helps you get the job, manage the job, and get credit.
Welcome to Winning on Main Street. I'm Gordon Henry. This week we have a terrific guest who can help you run your business better, especially in the number one area why small businesses fail: cash flow. That's right, cash flow. And his name is Chris Miles. He's called the cash flow expert, and you're going to find out with good reason why. Chris is the leading authority on how to create cash flow and lasting wealth. He's been featured in U.S. News, CNN Money, Bankrate.com, and Entrepreneur on Fire. Chris retired twice by the age of 39, and he hosts the podcast, The Chris Miles Money Show. He calls himself the anti-financial advisor. One of his quotes I liked: "We show entrepreneurs how they can find and fix their money leaks by saving money on taxes, paying off debt faster, and preventing money to simply slip through their fingers so they can have greater freedom and prosperity now and in the future." Chris lives in Lehi, Utah, near Provo. Welcome, Chris.
Hey, it's such a pleasure to be on here.
Well, great to have you. And I'm excited to talk to you because, so often we just hear about cash flow issues, and it's always at the top of the list of why small businesses have troubles. And that's your bag. So we're going to get right into it. Let's just start with, the basics. Why is cash flow so important to small businesses? And why is it the number one issue why small businesses fail?
Well, why do you need blood? Why do you need water, right? Like, you think about it, there's blood flow through your body, right? Without blood flow, you fail, you die, right? Without water flow, you you're thirst to death, right? Without cash flow, your business will die as well. It's the same basic principle. And you see that happening a lot, right? Because, like, for example, like successful businesses, you ever watch Shark Tank? You ever turn on that show? How often is it that people come in asking for money? They have this amazing product, amazing business. So from the outside, they look successful, but on the inside, they're frantically freaking out, right? Like they can't figure out what to do because they don't have the cash. And that's what's so important, and when I talk about cash flow, I don't just mean like just money, like revenue. Like a lot of people think cash flow and revenue are synonymous. That's not what I refer to when I refer to cash flow. I refer to cash flow as profit, right? Like what's real profit? What's the leftover after you've spent what you've spent? What's left over to, it could be reinvest in your business, but it could also be money that's coming home to you, because where you have more cash flow, right? You have more profit. That's where there's more options. And when you have more options, then you have more freedom.
Okay. Well, you got right to the heart of a question I was really trying to ask you. So let's talk about that, the difference between revenues and profits and cash flow. Can you have a business that has nice revenue and is profitable, but still have cash flow problems because you're not collecting the cash?
Yeah. Yeah, depending on how you do your books, right? For example, there's a lot of people that out there like might have receivables, a lot of accounts receivables out there where, or maybe they have an expectation of monthly memberships or something coming in. But if that money isn't collected on, like, especially when we hit recessions and things like that. And I ran into this situation before too. It's the last recession. I went from like millionaire to upside down millionaire, where I was doing great. I didn't even worry about money. I didn't even track my money, and then all of a sudden, next thing I know, I'm starving. I'm like trying to figure out how to do this. I'm like on welfare as a guy who's supposed to tell people how to become financially free. And I'm back in the rat race, and that's really because you got to have that flow of money constantly coming in, whether or not it's on the books to be down the road, that's not guaranteed. It's got to be something that's coming in right here and now that actually improves it. And the faster it comes in, the more it comes in, and the higher profit you've got in between your revenue and your expenses. There's got to be that big gap, because if you don't have that, man, one little trip in your revenue or a little trip into increased expenses. And the next thing you know, you're upside down. And that's where you go from free to freak out, right? And we don't want freak out.
Right, right. So, you could have a business that, let's say you've booked some jobs, maybe you work on people's houses and you've completed the jobs. And so you've maybe even like invoiced those. And I guess some businesses maybe say, okay, I got revenues when I've sent out an invoice, but you're having to pay your employees. So that's cash out the door because I got to pay my employees, but I haven't collected on those invoices because I'm letting people pay me slowly. And so I've got a cash problem, right? Because money going out the door, but not coming in the door, even though I've had jobs and, quote unquote revenues, right?
Exactly. Yeah. It's like, I knew a real estate company, the same thing happened to them. Like all of a sudden their accounts got frozen, and they had to like put everything on pause, but they still had bills. They still had to make payments and things like that. And it's like sticking the stick in the bicycle spoke. If you put a stick through there, all of a sudden you flip over the handlebars and you crash. It's the same thing in business.
Okay, Chris. So we've established the problem. How do you make it go away? How do you accelerate the money coming in so you don't have the cash flow problem?
You got to look from two sides of the equation, right? There's always two sides of this coin. One is, of course, is how do we increase revenue? And then two is how do we become more efficient with our expenses? And notice I didn't say just cut back on expenses, although that could be good. I'll tell you, COVID was awesome for a lot of businesses because a lot of them just said, I need to pare down. Or in a lot of cases, they had to let employees go or put them furloughed. And then they realized what they could really operate on. They realized like, wait a minute, do I have too many employees? Or do I have, am I paying out the nose for the stuff that I really don't need? It's not really a production for my business. It doesn't generate more revenue. Why do I keep hanging on to this? So it's funny because a lot of people, at least if they pivoted nicely, a lot of people came out of this much stronger, even though there's still a lot of uncertainty ahead of us, right? I think the worst is still yet to come. The truth is that a lot of people came out stronger. I have a lot of dentists that are clients, right? And same thing happened to them. They actually were considered a non-essential business. They had to shut their doors for 2 months or more. And man, if you don't have cash on hand for one, right? You don't have cash reserves. That's a problem because you can't just rely on the government that's going to pay you on time. Because come on, I haven't got my tax refund from last year in 2020 yet. They're not timely, right? And then two, we got to make sure that if you have to keep paying out, how do you keep having money to do that? So if you don't have money coming in, it's good to have some reserves too. So one is revenue, and then two is expenses. Best way to do this is start tracking this, not on an annual basis when you report taxes, right? We don't want to do that. This should be something that should be done at least twice a month, if not weekly. Going through and, if you use QuickBooks, right? I love using things that give me leverage, right? I like no work. I pride myself on still, having a massive 7-figure business and I still am part-time, right? Like I'm still working like about 20 hours a week, but that can't happen if I'm not tracking my money. So tracking the money that's coming in and tracking the money that's going out and constantly assessing and analyzing, which is this productive? Like the money's coming in, where's it coming from? How can I hit the crap out of that? It's the Pareto's principle, right? The 80-20 principle. Which one gives me the 80%? How can I keep hitting into that? And then of course, even then I even did what I call Pareto, the crap out of the Pareto's principle, which is what's the top 20% of the top 20%? What's my top 4% that gives me 96% of my revenue? And just hyper focus on that, get rid of all the other stuff. So like for me, 2015 with that example where I went through a divorce, which is not cheap or fun, right? Emotionally, I was shutting down. I went from working 50, 60 hours a week to like 5 hours a week because I was emotionally just a wreck, right? I could barely maintain my clients. But what was kind of cool with that is I started to question everything. It's sad that it takes a life event like that to get you to question everything and reassess. And I started reassessing everything. I started cutting, back like, wait, is this productive or not? All these networking events I went to, that's like 10 hours a week. Am I actually making any money off this? No. Well, get rid of that. What about these live speaking engagements? Hey, I can do this stuff online. This is before COVID, right? It's like, I could do Zoom meetings. What about that? That's kind of cool. And when I started to do that, also my expenses came down. My revenue doubled the next year in 2016. But as a result, my profit didn't just double. It actually went up like 8 times that year because I was able to get really efficient with my costs. And when I made extra revenue, it was like, it was a night and day difference. I mean, before it was like hustle, right? After that, it was no longer hustle. Now it was more like hey, I can take a breath. This is really cool. And that's where I think everybody should try to get to.
Okay. So let's take one of your or some of your clients, your business clients. You mentioned you have a lot of dentists. Maybe you want to focus on that.
Sure.
So how do you recommend they improve cash flow, both from the revenue standpoint and the expense standpoint? You were just talking about cutting expenses. What are some of the ways they would typically increase revenues and decrease the expenses and improve the flow?
Yeah, decreasing expenses. A lot of times we look at, I always joke with like, staff, right? I mean, are you really as efficient as you can be with the personnel you have on hand? Because no doubt wages and personnel can be one of your basic expenses. Mm-hmm. Marketing, sales. One is, like I said, hyper focus on what you do best, especially if it's a highly profitable thing, right? Or it's a thing that really is a lead generator, a thing that really brings people into your business. It may not be the most profitable, but it gets people in the door to then do other profitable things, right? Like I realized with my own model is that, I have consulting that I do. I do consulting for some clients. At first I used to just put all the focus on the consulting fee, and that was what they paid me. But then I realized, wait, I can actually make money off of some affiliate arrangements too, because if there's a connection I can make because it's going to help enhance their business or their finances in some way, can I have an affiliate relationship? Well, that starts to help improve my revenue. Therefore, I say, hey, I don't have to keep jacking up my consulting fee. I can actually bring it down a little bit, make it more reasonable, and get them in the door, and then do more profitable activities on the back end. Other revenue streams can be just additional revenue streams. What can we bring in that will actually enhance, especially if it gives more of a client or, type of client experience or customer experience that will help that as well. So, I mean, there's a lot of different directions we can go with that, but I would say just try to dumb it down, find one of those things at least, and just hyper focus on that until you can work on the next thing.
Is one of the typical cash flow problems that small businesses have, is it the payment flow, the speed with which they're collecting, or the speed with which they're paying? Do you address those issues? And I'm also wondering, is technology, you talked a lot about tracking, does technology play a role here where businesses are just not aware of how much they have either in receivables or payables?
Yeah, it could be a little bit of both, right? Oh boy, I just got off on the technology thing. Remind me of the first question again.
Yeah, well, they're kind of linked, because I'm saying, do businesses have a problem keeping track of what they're owed or what they owe? And then that ties into, how do you do better tracking and managing of that? Should they be using a tracking system or a software system?
Absolutely. Whatever you measure improves, right? There's no doubt. And so, yeah, technology can be amazing that way. If you can get something that helps you track, like I said, with using QuickBooks as a business owner, right? Something simple, or Xero, if you want, Xero, right? Mm-hmm. Is Xero software. There's another software like QuickBooks you can use, but a little bit cheaper if you're just starting out. I mean, all these things can be great. Heck, you can start with, if you're a small, tiny startup business, very tiny, you can start with just a spreadsheet. You can do something simple as that, but that is not a permanent solution, because I've known people waste hours of their life scaling up a business and still keeping that spreadsheet. So you got to gravitate and kind of evolve into technology as you go along. Eventually, you're going to want things like dashboards and different types of systems that can help you start to track and manage, even lead flow, right? Like you were mentioning, how do we track lead flow? Where are they coming from? Do we know closing percentages? If there's a lot of sales and tracking that way, all those things need to be done. And the beautiful thing is it's easier for us now than it's ever been, right? Heck, you can even reduce costs just by not hiring people for certain stuff. I remember the days 10 plus years ago, like I had to get an assistant for everything, booking my calendar, right? Making calls, verifying appointments. Well, now I can do the same thing, paying, what is it? $25-26 a month for Calendly. And that will do all that stuff for me. Like I don't have to worry about scheduling back and forth, calling or emails, all that kind of junk that wastes time to pay somebody else for. I can have that technology do that for me. Somebody else books it. It sends them the reminder, right? Just like I got a reminder from you saying, hey, coming up today, here's the appointment, or in 24 hours, here's the next, our appointment come up, prepare for this, right? Like what a beautiful thing technology is to allow us to create leverage of time and money in our businesses.
Right. Well, our company Thryv, as you know, sells software that helps small businesses automate their client experience. And a lot of that back and forth communication, the reminders, the notifications, the calendar appointments,
Yeah.
the bookings, the invoices, the estimates, all that stuff gets automated within the system. And the whole idea is that it makes you easier to do business with because people can just look at their phone and know where they are with you. And also,
Yeah.
as you said, you don't need a person to do all those things for you. The software does a lot of the work for you.
And it's cool if you can have it all in one versus, hey, I'm going to piecemeal it together with this little service to do this one thing and this service to do this one thing. And then you're trying to manage different services, have it all in one place, so much more efficient.
Yeah, as you said, we do find that if it's a very, very small business, like maybe somebody who doesn't even have an employee, they can use one or two tools themselves. But as soon as you start to have a real business with a couple of employees, that gets really unwieldy, and you do need
Oh,
that
yeah.
all in one system. And also, it
Awesome.
enables you to see what your staff is up to.
Yeah, that's great.
So moving into the technology piece a little bit, you mentioned QuickBooks, you mentioned Xero. Is there any other specific software for small businesses in terms of cash flow management that you're recommending?
I mean, I wouldn't say like I'm recommending per se. No, I mean, like a system that you just described could be plenty for that, right? If especially if we track sales and things like that, even better. But yeah, everybody has a different system for that. Like I know, depending on your industry too, because like I have a lot of real estate investor friends, like they'll go on and on about their systems for tracking their stuff, but it's very specific to only real estate. So depends on your industry, but usually in each industry there is something that exists that will help you manage and track, whether it be salespeople, whether it be some of the operational key pieces, but something like that. Yeah.
Right. And in terms of collecting, this issue of speeding up collections, making sure
Yeah.
you're actually bringing in the cash that you're owed, what do you recommend there? Is it just keeping on top of your customers with emails, with phone calls? What do you recommend? I know as just a consumer, I'm surprised how many businesses will mail me a physical paper invoice. So days and days in the mail, especially nowadays with the mail with COVID. And then they'll say, just send me a check. And, I try to be prompt, but, if you don't remember immediately or don't take care of it immediately, that can be days, and then more days in the mail. And they're really giving up a lot of time that cash could be in their pocket if they were to do it more like automatically, electronically, right?
Oh, I agree. Yeah. If you have a merchant account that obviously like does have, regular reminders, or you have to teach it or, program in, they have regular reminders, whether it be weekly or depends on the type of business you're in, right? Weekly might be overkill, might have to be monthly, but still something to remind them, keep a bug in their ear is great. But you might have to do real touch at some point, but at least take those paths first before you just jump right into, hey, let's get you on the phone. What's going on? Return my call, please, because I'm desperate. We don't ever like to be in that place and be bill collectors. But I think that's a big one. I would say in addition to technology is just setting expectations too. I mean, and from two ways you can set expectations. One is you just let them know like, hey, we expect this, right? We expect you to pay timely or whatever. Like, and I would even use a little bit of psychology on them. Say, hey, pretty much the majority of our customers, if not all of them, all pretty much pay on time. And so we know you're a grown up. We expect you to take care of yourself. We figure we don't have to babysit you to take care of your own little bills because you've been doing it for years, but we expect that. So kind of planting that seed is one.
Yeah.
The other thing is plant the seed in your mind, like only focus on attracting people that do pay on time. That was one thing I discovered like 2015 to 16 is when I started going into that Pareto of the Pareto, right? I started, instead of focusing on people I didn't want, people that drained my energy, I said, who are the people I really do want to attract? Like, who is my favorite person to work with? And then whenever I'd be on my podcast or in an interview like this or something else, I would think of the image and that person, even if I could put a face to it, but sometimes it's just the personality or the kind of situation they're in. I would picture them and talk to them. And every time they would come to me, they're like, yeah, I felt like you were talking right to me, and they did. And so same thing with that kind of aspect of attracting people that do pay you on time. Instead of saying, oh, I hate having customers that just don't pay me on time. Well, now you're just focusing on the customers that will keep not paying you on time.
Right. Focus
on, hey, I love these customers. So these guys pay on time. I don't have to like explain anything. I don't have to babysit them. They're grown-ups. They actually, they're full of integrity. They'll actually live up to the word. And I don't have that situation. And if it does come up occasionally, it just seems like a surprise. That expectation just occurs. And so that's something that goes beyond the software. It goes beyond the numbers, right? It's something that psychologically and even mentally, that if you do it, it's amazing how you can impact and influence your numbers so much more dramatically.
You say you've been in the shoes of a small business owner, and your goal is to help them in the one area that matters, that most business owners aren't familiar with. And you say those are accounting and taxes. We talked sort of a little bit about the accounting, at least from perspective of trying to collect.
Yeah.
Talk us about taxes. What are some of the tips, recommendations, methods you use to help small business owners with taxes?
Yeah. One, you have to make sure you have a real CPA that actually is an active CPA, right? So most accountants are passive accountants. Like pretty much their job is they wait for you to give them the numbers. They might send an email reminder saying, tax time, send me your crap. You send them the numbers, they send you the tax bill. And that's pretty much how it works. You need somebody who's like really actively like being involved, really getting strategic to say, hey, have we tried this strategy? Or you ever thought about this or this? Let's find out ways to really maximize your tax situation here. How do we minimize the tax burden while still not making you look like you're broke, right? Because that's key too, especially if you're ever trying to get lending. You don't ever want to look like you're broke, right? And so, big strategies like that often, especially now with the way things are going with the online world and Zoom and everything else, there's strategies like the Augusta rule, right? Like corporate rent, where, if you're working out of your house, now one thing you don't want to do is you don't want to be paying a monthly rent payment for your house, because that's something the IRS actually targets. But if you want to actually avoid paying tax on your money, what you can do is maybe once a month, you can't go over 14 days. So they call it the Augusta rule, because Augusta, Georgia is where the Masters Cup for golf is played, right? Well, people had said, hey, I'll just do a short-term rental, rent out my place during this time, because I don't want to be in Augusta when everybody's coming flooding in our town. I'll rent out my house for obscene amounts of money, and then I'll come back and I'll live it the rest of the year. So they'll make some great income. So the IRS said, okay, great. We'll let you do up to 14 days a year of rent that you can earn that you do not have to pay any taxes on. Now, once you hit 15 days, you start paying normal passive income tax, right? But if you're just at 14 days or less per year, you pay nothing. So what if you just said, hey, what if my house was built the same way as I build a hotel, right? Like if I were trying to get meeting space at a hotel, get the room, the Wi-Fi, all the amenities and everything I need, what would they be charging me per day? And it would not be uncommon to have a Marriott or something like that charge you like, $1,000, $1,500 in a day for the use of that meeting space, right? Well, what if you just take the same thing, say, instead of that $1,000, $1,500 a day going to the meeting space, what if I just paid it to me? So in my case, my company, Money Ripples, pays Chris Miles for the use of that one day for using my office, right? Like if I'm just doing massive interviews like I'm doing like this week, cool, I'm using this office over and over and over. I can say, hey, I'm using this as my rent, Now I don't go over those 14 days a year. I might be at 10 to 12. But if I'm charging myself like, $1,000 or $1,500 a day, now you can end up making like, 12, 15,000 plus a year. That's now coming to you. It's one, it's an expense on your business. So it's a write-off, but two, it comes to you income tax free, which could save you anywhere from $5,000, $6,000 plus on your tax rates. So that's just like one example. There's other cool strategies like R&D, like your business has a lot of research and development. There's lots of tax credits available to you that most people don't even realize. You usually have to find a specialized firm to help you do that. But I just knew of a dentist recently that got back like $22,000 per year because of the R&D credits they were getting. So there's a lot of things, but just know that it requires an active CPA, not a passive one that just takes your numbers and spits out a number for you. Like you need somebody that's strategic with you.
Got it. That's some great advice. We're going to take a quick break to hear a word from our sponsor. We're going to be back with more from Chris Miles in just a minute.
This is small business expert Barry Moltz. 2020 has been a tough year for small business owners. The COVID-19 pandemic, the civil unrest, and a contentious presidential election, any one of which would have made a very difficult year, but they actually all happened in 2020. I've been so impressed with the resiliency and the ingenuity that all small business owners have shown during COVID-19, but it's now time to turn the page to 2021. If your business is now stuck and you're unsure how to grow it in a post-COVID-19 economy, give me a call, 773-837-8250, or you can email me at barry@moltz.com. Remember, I'm here to help you any way I can.
We're back with Chris Miles, and we're going to talk now about financial independence. I know that's something near and dear to your heart. You're financially independent. You want your clients to be financially independent. You have something you call the FIRE method. I guess that's financial independence, retire early. Sounds good. What is it? How do you get it?
Yeah, all it is, you got to have your passive income either meet or exceed your monthly expenses, right? And primarily we're talking about at home, although you could start translating this into your business too, right? But so for example, if your monthly expenses are $8,000 a month, how do we get you to get additional streams of income that are coming in passively of at least $8,000 a month? The problem is what I see with a lot of business owners, that they constantly say they're saying chronically, right? This is not just an early stage thing. This becomes a late stage in their game where they'll say, I'm reinvesting in my business. I'm reinvesting in my business. And pretty soon that hustle now becomes a habit, right? They're always reinvesting. If you ever hear like Mike Michalowicz, who does the book Profit First, right? He even says, he's like, listen, if you're reinvesting money into your business, that's not profit. That's an expense, right? You don't have any profit. You are profitless, And so you got to have profit that's going to spin off and give you personal income too, and even give you, profit, like even above and beyond what you need, so that you can take that money and turn it into actual streams of income. So ways that done that, like this is where I work with most of my clients, whether they're business owners or not, right? Because they're all saying, Chris, I just want to get to the place where I work because I want to, not because I have to, right? Like I want to work by choice. And here's the crazy thing. Once you're actually financially independent, even if you're on the way to financial independence, where you just know that the stress is backing off, when you become more relaxed, you make more money because customers and clients are just naturally drawn to you. I mean, if you can get to a point where you can relax, say, listen, I don't need that one customer, that one client, because I'm fine. What's amazing is that's when everybody wants to pay you, and so that should be a huge goal in your life, to not just keep putting money back in your business, to then hopefully just have a high paying job. And you should have something outside of it that creates passive streams of income, and I'm not talking about gambling and crappy 401ks and stock markets, because those things don't work. Like that's the stuff I used to sell as a financial advisor. It's got to be something that's outside the norm, things that financial advisors don't offer, things like real estate and things of that nature.
Your company is called Money Ripples. What do you mean by the money ripple effect?
I was out for a run, and that's when I get a lot of my best inspiration, right? And I started thinking of the vision I had, because up to that point, my previous company, I'd done some of the same work. We helped hundreds and hundreds of clients free up massive amounts of cash, like on average, $34,000 a year, just from the business. Not even talking about passive income, just freeing up money from taxes and debt and things like that, And so I was like, well, what is this? And what's my big vision? And I saw the vision of like, the fact that there's a family that I helped, like the one in South Dakota, where we freed up $6,000 a month for him. And I remember like the wife was in tears crying, because she's like, you know what he did with that first $6,000 he freed up? He actually went and bought a $6,000 four-wheeler. She's like, but that's the coolest thing, because now he's actually taking off weekends of work. He's not working on the weekends anymore. We're now, as a family, taking that four-wheeler out every single weekend and creating memories. She's like, I have my husband back. And so I thought of that couple specifically, and how that was impacting them and just changing their life. And I thought that, and how that will affect his kids, his family, the generation beyond him, because now it's not scarcity, desperation, it's abundance, right? And how that will affect them and the community and the country and ultimately across the world, and creates that ripple effect.
I see.
And that's that ripple effect of freedom that I'm here to create. Because like I said, I don't have to work, I don't have to do squat. I can just, in fact, my life could be way cheaper not running a business, right? Like I could just do my thing with my investments and be happy. But the thing is, like, what do we do with our gifts? I believe we have God-given gifts and talents to use to help others, and what are we going to do with that time and those talents that we have? We can either just keep it for ourselves and just take care of our family, which I think is one of the most selfish things we can do, is just take care of our family, or we can include that whole world to become our family. And that, I think, is the real difference. That's when we create that ripple effect where we leave this planet a better place than when we came to it.
We just have a few minutes left. I'd like to learn a little bit more about Chris Miles, the person. You mentioned running as something you like to do. What do you do for fun? Is it mostly outdoor sports and recreation? What do you like to do when you're not working?
It depends on the time of day. When I first wake up, I like to go work out. I like to go to the gym, or I like to run. I am a marathoner and stuff. I wouldn't call it fun, but
Mm.
the fun part is I like to always place in the top 3 of my age group.
Mm.
So I'm very quietly competitive.
Mhm.
Like even in business, like I always want to be the best. And with running, I'm like, oh, there's always that guy ahead of me. I got to beat him. And even if I get first place, like, yeah, but there's that guy that was 20 years old, half my age. He beat me. So I got to beat him, right? There's always another level for me. So I get fun from that. But at nighttime, I'm like, I don't want to use my brain at all. I've used it today. Even if it's part-time, I'm like, I'm done. I used a lot of juice. Let's turn on Netflix. You know, like that. And so, I mean, that's pretty much it. I also like to explore. I go snowbird every winter. Like I just got back from Florida for spending a month there. I love to go experience new things, you know, like that's something that now in my 40s, I'm like, I never had that in my 20s and 30s, constantly hustling in business and saying someday. Well, now someday it's got to become today at some point. So those are the things I love to do. It's like, yeah, I love sports. I love working out. I like Netflix, and I like new experiences and travel.
I got to ask you, what's your best marathon time?
Best marathon time was before COVID, obviously. I did it in 3 hours and 15 minutes.
Wow.
I just barely missed qualifying for Boston, which ticked me off.
Pretty darn good.
Yeah.
So we always like to recommend materials that listeners can access to learn more about various topics. Do you have a particular book or podcast that you would recommend to small business owners as a way to improve themselves?
Well, obviously, you're listening to the show. That's a start, right?
That's a start.
Yeah, you should be here. I think it depends on which angle of business. I mean, if you're looking to get technical, I mean, there's lots of those out there. I really don't listen to a lot of the technical podcasts, although I know they exist. I know, like, I've been on Entrepreneur Fire a few times. I'm about to be on for a third time. Is always a good one to get lots of variety of experiences. Personally, I've kind of been following more Ed Milet, a guy I knew like almost 20 years ago in the financial advisor world, and now he's getting big with his podcast and stuff. So I've been following him a little bit more lately.
Ed Milet.
Ed Milet. Yep.
Okay, great. Okay. And finally, I'm just always curious how successful people get that way. How do you become a successful person? And I was curious about the habits you practice. Do you have a certain routine you go through, time of day you get up, certain way you structure your day, certain goals you have? How did you become a successful person?
There's a few factors. You mentioned daily routine. Like, in the morning, I like to get up and work out. That's also a good time for meditation, good time for prayer, just getting yourself centered as a person versus most people where they wake up, they roll out of bed, they take their cup of coffee, and they're right there working. Like, that's the worst way to live life. And you're not in an inspirational place. You're in a reactive mode, not a creative mode. So I really like getting up, getting that body, mind, and spirit going. Right. But I'll tell you that there's two other things I would say that are habits that really helped. One was just not giving up, right? Like just consistently beating the same boring drum day in and day out, doing the same activities day in, day out, always just progressing. Again, I'm a marathoner, right? So for me, it's just one foot in front of the other, versus sprinting. Like sprinting doesn't do it well for me, and I just burn out in business. It's just taking a nice pace, being patient, not forcing results, but still being proactive, right? And then the third thing I would say that I learned that it actually got my business to grow 900% in the last 5 years while working a third of the hours. And that was first and foremost, listening to my intuition, like really listening to my gut. Because every time I would listen, and it's not bad to listen to coaches and mentors or other people have opinions, right? But you got to check in and see if it really feels right. Like the crazy thing is Donald Trump would have never had The Apprentice had he listened to his board of directors. His board of directors hated the idea. They thought it would actually trash his Trump name. His response to them was, how can my name be trashed anymore? Like, I'm already kind of a controversial guy. And this is pre-presidency, obviously, right? This is even before that, being impeached twice, but he was like, no, I'm going to do it anyways, despite them saying no. And look what it did for him, and that's because he followed his gut. And same thing happened for me. When I followed my gut, I started doing certain activities in my business that were counterproductive or counterintuitive, I should say, right? It's amazing how my numbers grew so much more than if I had followed just the mainstream advice that everyone was giving me.
Right. Okay. Well, that's some great advice. I really appreciate it. Well, we're out of time. Chris, you've been a great guest, and thanks for your time again today. And really, really great to have you here.
It's been such an honor. I appreciate it, Gordon.
If you enjoyed this podcast, subscribe and tell a friend or colleague to subscribe, and please leave us a 5-star review. We'd really appreciate it. Until next time, it's been Gordon Henry. Make it a great week.